Alrighty, guys. Just wanted to show you another resource that you can utilize is the website Barchart. I utilize this website a lot. Um, it gives you a lot of data and a lot of information that you just can't get in a lot of places. But one of the things I want to show is seasonality. You know, typically when I talk about seasonality, that's how I know, what to prepare for. So I already know in certain times of the year, the market's going to go down and the market's going to go up because that's just seasonality tendencies. And here, the total percent of return by month over the last 15 years, you can see a pattern. So the first 3 months, the first quarter, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Excuse me. So you'll see a bunch of different months in this quarter that have been negative or, didn't give high returns. Um, and yes, you have some outliers like 2019, 2018. But as you can see, from in those like 2018 and 2017, the following months have been much lower. In 2020, we had COVID. 2021, we started the year off negative. And then 2022, same thing. 2022 was a tough year. And then 2023, February, it's down. So it's not saying that, hey, January through March, we are going to go down. But the likelihood is higher than other months. And so usually in February, I'm cautious. January, February, March, the first quarter, I'm going to be cautious. I'm still going to trade. I'm still going to go long or go short if, the opportunity presents itself. But I'm still going to be cautious. Now, after those months, April, it's a hit or miss. But typically April is pretty good. And then you got May, the summertime. Summertime is usually when the markets are doing really well. I can see for most of the years, of these 15 years, the market has been green in the summertime. Then you got the fall time. So you got the first quarter and you got the third quarter. So once again, August, September, October, not August, July, August, September, after July, I'm going to be cautious around August and September. It is what it is. I'm going to be cautious because I can see majority of the time the market is low and down those months. Excuse me. I've been drinking some seltzer. Then you got the third, the fourth quarter, October, November, December. Now, because July is usually really good, August, September, October are the cautious months for me. And then November and December, hey, we off to the races. And so that is, the key things that I usually use during these times to kind of factor in, factor these in when you're looking at the trade. It's seasonality tendencies. So you can use bar chart for a lot of things. They do great when it comes down to the options. So let's look up SPY really quick. Sorry about that. Let me look up SPY real quick. And so here we look at the different options. Bar chart. Excuse me. God dang. Here, option prices. What I like to look at is put call ratio. And I'm going to talk more about options in another video. But I like to put call ratio because it kind of gives you an idea of what the markets are kind of doing. And so you can see the volumes here. You can see the implied volatility and things like that for the different options. And I like to, look at these to determine One, which option I'm going to get, because not all options are the same. That's one thing that people don't talk about with options is, let's say you get an option, but no one's buying that option. You know what I mean? Um, that particular contract is not going to have motion because no one's buying it. You know, you need to buy it in order for the price to go up. Yes, the prices might go up. That's why sometimes you might see your price go up if you buy on a call, but the option contract ain't moving. You know, people still need to buy it. So I like to look at the open interest on a lot of these contracts to kind of determine, what may be going on. So this is this week's. So for the 31st, it has 1.7 million open interest, meaning 1.7 contracts have been purchased, and that's for puts. And you can see the call open interest is less. So people are betting by the end of the 31st that the market's going to be down versus up. And so this helps me, gives me an idea. Even like this, the 21st, people are betting once again the market's going to be down. So you can see, a lot of people are betting that the market is going to be down in the beginning of the year. And then it might start switching. I wouldn't go too far out, like until 2028. I wouldn't do that. But for like 3 months at a time, it will give you an idea of what a lot of people are thinking. And so, yeah, that's it.